am active grandma. As a certified public accountant by profession and as a former bookkeeper accountant for 10 years, I will be doing short video clips about accounting. In these video clips and tutorials, I will try to explain accounting in the simplest way so that it will be easily understood by the users and students that will watch my videos. For a start, we will be discussing the definition of accounting. The word accounting originates from the root word account, which means to keep record of events or activities in the form of a story, narration, report, or statement that will give a full account of what transpired in a certain period. Another meaning of account refers to detailed recordings of money received and spent which was entrusted to a person. In a practical level, that person has to account the money in his or her possession and must submit a full accounting to the owner. Those explanations gave us an idea how accounting works. There are new definitions of accounting nowadays, but for me, I will stick to the definition of AICPA, or American Institute of Public Accountants. AICPA had defined accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are, in part at least, of financial character and interpreting the results thereof. Why is accounting considered an art? It's because it requires the use of skills and creative judgment in dealing with all transactions and events that has to be accounted for. Based on the definition of accounting, here are the 4 steps to remember. First, recording. Second, classifying. Third, summarizing. And fourth, interpreting of results. What are supposed to be recorded, classified, summarized, and interpreted? They are called transactions and events. You may ask, what is the difference between transactions and events? In accounting, transactions are events that have monetary impact on the finances of the business. They are the daily activities with monetary values that cause changes in the financial condition and or position of the same. Events, on the other hand, are also called transactions, but can either be financial or non-financial. This I will explain in the upcoming tutorials. For now, we will be dealing mostly with transactions. Now, let us discuss the first step in accounting, which is recording. After analyzing the transactions, recording will be done in the form of journal entries, which will be written in the book called General Journal. That process of recording is called journalization. It is a method of documenting business transactions in chronological order and within a given time or day. Just to give you an idea, here is how a general journal page looks like. You will notice that there is a column for date, account title and description, debit, credit, and a post reference. It is recorded in a given pattern showing the date, account title, and descriptions. A column for the debits and credits and the post reference. Post reference is used to trace the origin of the transaction. Second step is classifying. From the general journal, all the journal entries will be classified in accordance to account titles and will be transferred to the general ledger. General ledger is the master book of accounts. where all the journal entries and/or all transactions are being recorded, sorted, and summarized. It is where the ending balances of each account are taken before preparing the necessary financial statements. This is how an actual general ledger looks. This is the actual GL of my own company 25 years ago. The headings of each page show the account number, the account title, and the page number. The subheadings show the date of transactions, descriptions, post references, and the debit and credit columns. General ledger is also represented by a graphical illustration called T-accounts. It is called T-accounts because you will notice that the data are put under a graph similar to a letter T. The third step is summarizing. After recording all the journal entries in the general ledger, all the debits and credits will be summed up to arrive at the ending balance for each account. Summarizing is done every end of the month. All the accounts are balanced and a trial balance is prepared after. This is done monthly, quarterly, and yearly. The fourth step is interpretation of results. From the trial balance, ending figures will be interpreted in the form of financial statements. Financial statements will show if the business earned an income or incurred losses. It will determine the financial position and financial condition of the business. That is all for today's lesson, and I hope you learned something and fully understand the definition of accounting. Watch out for my upcoming easy tutorial videos that will make you understand accounting the easy way. If you haven't subscribed to this channel, just click the subscribe button and the bell button as well so that you will be updated in my upcoming videos. This is Active Grandma saying goodbye and see you in my next tutorial.